Get in Dinshaw Irani also in the discussion, CEO of Helios Mutual Fund. Dinshaw, morning. Thanks for your time. Let's just start chatting about consumer stocks first. You know, yesterday Britannia numbers came out, barely any revenue growth, but the commentary continued to remain cautious. But a week back, both Dabur and Godrej came out with very good commentary. Stocks ran as much as 10% that day, saying that there are early green shoots. Because you guys analyze consumer stocks a whole lot, what are your thoughts there? The underperforming consumer lot, do they deserve a closer look now?
So Ajay, first of all, thank you for having me on your show, and a very good morning to you, your team, and your viewers. So the fact is that there are two different segments altogether. You're talking about FMCG, and mind you, I mean, if you talk about Dabur, it's more of a rural-heavy kind of a portfolio and more of a health-oriented portfolio, and it's I would say it's more towards discretionary rather than pure FMCG as such. I mean discretionary as in you're talking about health, which can be a impulse purchase or whatever. So I don't think those segments are doing badly. It's mainly the pure FMCGs which are doing badly, basically because, as you rightly pointed out, there's still green shoots. I mean, it's been what 1.5 years since the rural markets have turned down. Recent reports which are coming out also pointing towards an urban slowdown on the FMCG side. So it's obvious there's a lot of caution in the air today. There have been a few call outs, but I think it's mainly pockets driven rather than across the board as such. My feel is that the constraint that RBI has put on liquidity, that also is having a problem in the markets per se, and you can see that in terms of expenditures and stuff like that. So it's obvious that it's a matter of time before things turn. However, having said that, the recent quarter numbers, they've not been pointing across. I mean, I'm talking about FMCG right now. They've not been pointing to a very buoyant market within FMCG or that space as such. So I leave it here.
All right, Dinshaw, hi, morning, and let's get in your take then as to how you're reading into the overall performance of the entire PSU space, the darling of the year gone by, and as things have started to the beginning of this year, it looks like it's only going to continue. A lot of reinforcement as well coming in from the government. Do you believe that, for those who've missed the bus on some of those PSU names within the defense, railway space in particular, that maybe it's a bit late now to get in?
So Aman, the fact is that if you had us on your show around 1.5 years back, we would have been also of the same opinion that these PSUs are not worthy of a second look and stuff like that. But actually, the present government has made it a PSU 2.0. I think it was your channel who gave that terminology as such. But the fact is that they are very proactive towards these companies. I think they've realized that market cap is the way to go, and not to appease short-term political needs from these stocks and stuff. So our belief today is, in fact, in our top 10 holdings, you'll probably see 4 or 5 BSUs within our portfolio as such. So we're also very keen. And in fact, when you mentioned that, is it looking too late? Obviously, there'll be volatility, given the fact that some of the stocks have run up too sharply, especially in the railway space. I think there may be opportunities coming by at some later stage. But within the defense space, I don't believe it's a problem at all. I mean, we're talking about a structural growth story out here, and especially the fact with these stocks becoming basis of outsourcing. But one caveat out here is that most of the plays within defense are service focused. You don't want to be stuck in those because those are more of a cyclical play as such. You get one big order and there's capacity are stuck. So you need to be service agnostic companies which you should focus at, and they're fairly I think a limited amount which are there available in the market and such.
Dinshaw, the one place which continues to be extremely lively is the IPO market, right? I mean, as we speak today, you've got 3 of them opening up. There's Rashi Peripherals, of course, a peer of Reddington and way more expensive than Reddington. But the small finance bank cluster, I mean, there's Jana SFB, there's Capital SFB as well. Anything that interests you in the line of new paper that's about to hit the markets?
So I will not comment on the individual IPOs which are coming by. But one thing I want to comment on is that obviously when markets are running high every day, you'll see newer IPOs. You have to be very selective with those. You just can't be going and buying any IPO which comes up. Maybe it'll give you a pop, but on the longer term, you got to be very cautious. Yeah? So you got to really analyze. My analysts haven't highlighted any of the IPOs which have come by of late, and that's why we're keeping a close watch on that market also. However, it's a very healthy thing to see newer companies getting listed because they not only add to the market cap, but they also get in new investors in a way because the way the markets are today, there are quite a few on the sidelines. In fact, before I came on the show, I was just thinking of this. The markets today actually remind me of this old song which I remember hearing long back. ऊंची है बिल्डिंग लिफ्ट तेरी बंद है कैसे मैं आऊं दिल रजामंद है but that's how it is. So maybe this is a revenue that these guys who are seeing the valuations high and not seeing any corrections are coming in that way.
All three of us in sync are actually singing that song in our heads right now.
You're a Salman Khan fan,
right?
Yeah. Dinshaw? Salman Khan fan, right?
Yeah. No,
Actually, David Dhawan fan.
David Dhawan.
Right?
David Dhawan.
Oh, yeah.
No wonder you're always smiling. So, which part of your portfolio gives you smiles every morning? You bought it at the right valuation, earnings growth is not stopping by, valuation expansion continues to happen.
So actually, a big chunk of our portfolio has not been doing too well. I mean, finance, I'm talking about banking sector per se. But our belief is, and in fact, that's the beauty of our portfolio. Actually, despite that big chunk not doing well, we are constantly outperforming the index, and it's all across our offerings, not only domestically, but also the FPI that we're running, where we are advisors. So we're doing fairly well there also. So the point is that you'll have these pockets, right? You're trying to, when you develop a portfolio, you try to get a relay team in place where when one set of leaders are tiring out, the other set takes over the baton and starts leading the pack. So that's what we try to do. And I think we've found that mix and match. Our belief is that going forward will be the finance segment, which has been not doing too well of late because the heavyweights have not been doing too well. But as I said, that it's mainly because of the liquidity constraint in the market today that they're not able to perform so well. I think RBI also is cognizant of the fact that maybe you'll see some kind of easing of liquidity in the near future as such. So that should help the banking sector.
Actually, easing of liquidity till election appears difficult because the idea of keeping the liquidity tight was so that inflation is on a leash. Nobody other than no government would want going into elections and inflation becoming an issue, mehengai becoming an issue. Probably that is also something to watch out for. Around May, June is when liquidity may come back, and that has led to not only a clasp on inflation numbers but rates as well. Policy of course tomorrow, and ever since the interim budget has shown a lower deficit number along with lower borrowing, not crowding out the borrowing space, one is getting a sense that probably this policy will be relatively much more dovish. Would you go with that argument?
I certainly would, Ajay. I also believe that, RBI has been fairly proactive in managing not only the inflation, but also the rupee dollar rate as such. And I think that has led to a lot of comfort in the FPI segment also. In fact, one of the reasons why that building is uncha is because of the way the flows are in the FPI side, right? I mean, there's no supply to counter that flow. Domestics have been fairly gung ho all along, right? There's the FPI who's turned bullish, and fortunately for us, China has been doing badly, and that's where the real flow is coming from as such for India. So I don't see that being a problem there, and that's why I believe that RBI is here in the right place, and I think they're doing the right nuances in the market as such. So.
Okay, fair enough. And just wanted to understand what the road when it comes to rural recovery slowing down. What do you believe the road ahead for consumption holds?
So basically, Awan, the point is that in consumption, you need both the engines to kick in, right? As I said, that maybe rural is picking up, but urban is now the indication that it's slowing a bit. So I get a feeling that both have to kick in before it picks up. Some of the companies that you mentioned earlier who have done well also have done well because of the offshore business doing well as such. and they have a huge chunk of offshore business per se, which has done fairly well. So I don't see the domestic FMCG space giving out much, doing much going forward, because one, the valuations are too high, and the second part is inflation, and obviously the purse strings are becoming tighter for the consumer. So it's more or less even Stevens right now. I think the jury's out. Maybe probably another quarter or two, and one can take a call on that segment.
Okay, Dinshaw, great to have you on the show. Thanks as always for joining in, and yeah, keep singing.
Thank you. Thank you.